What are you seeing today in terms of options that could fuel some kind of rally?
Hi, Abigail. Yeah, we're from the technical point of view, where you hit all the key points. We're at a convergence or near a convergence of trend line support, 200-day moving average support, 50-day, 100-day. They're all right around here. So it doesn't surprise me that we found a bottom at some point today and tried to bounce off of that. That's fairly normal. When selling doesn't work, traders start to buy. The difference is today, not a difference. It's something we've seen before, but we've seen very big volume in SPY options that expire today. We can call them zero-dated options, but they're actually the same old weekly options that we've had for the better part of 2 decades. It just happens to be Friday when 600-plus options become zero-dated, all the weeklies. And so you're still seeing that speculation. People want to not just buy at the low levels. They want to chase the bounce if it happens. And so you do see this from time to time. And the type of moves we've seen today are people sort of finding the lows and then chasing them a little bit higher and then sort of running out of steam.
Yeah, and there's, we're looking at another light volume day too, so I'm wondering what role that could play into it. But before we go deeper into those 0 days to expiration options, let's bring in the VIX, because the VIX is near 2023 highs. Nonetheless, it's at about a 22 or so. The curve, not that much higher. It's healthy, but not that much higher. What are you expecting from the VIX?
I think we're sort of at this equilibrium level for VIX. We seem to have sort of gravitated toward the low 20s. When we get into the teens, we sort of find ourselves a little bit out over our skis and a bit complacent. As far as a very steep curve, we're not really seeing that either. I think to a certain extent, a lot of the de-risking has occurred in portfolios. Although I will say we've done a lot of people have done an impressive job of re-risking over the past 7 or 8 weeks. But for the most part, I think the VIX is more or less where it ought to be, given the type of movements we're seeing in the market these days.
So it sounds like you probably are not, at least at this moment, a buyer of vol in terms of those daily options, and also the S&P 500, because on the year, I believe the index is still higher. Yet we have this little bit of a pullback, low volume pullback in the month of February and some of this hotter economic data. Is this just a repricing of risk, and what is the role of the daily options, if any?
Yeah, well, to a certain extent, we had a big risk-on rally. I see it as the January effect magnified. We really got off an oversold bounce in a lot of key names, and I think a lot of individuals and institutions alike saw the bounce, occurring in the 2022 stocks that have been clobbered, Meta, Amazon, Tesla, et cetera, and that broadened out into a much more risk-friendly environment. One of the tools that people utilized for whether you want to call it momentum chasing or FOMO, were these zero-dated options. They've been around actually since last spring. The difference is no one thought about them very much because in a down market, you don't see the type of speculation that you do in an up market. And people realize that if you're going to speculate, these are the lowest price options, not necessarily the cheapest, because we think of cheap in implied volatility terms differently than just low priced. But you can get a good bang for your buck if the move goes in your right way. That's why they became popular.